So the question is silver headed to $75 to $125 an ounce in the next 1 to 2 years? This is by Jason Hamill, who's a big-time silver guy. Been following him for several years. This is his thoughts. And after reading his thoughts, every argument he makes is 100% fact, and you can't really argue with it. The only part you can argue with is when, how soon, exactly when. He's thinking 1 to 2 years. Could be very right. There's no telling. Will I be upset if it took 5 years? No, not at all. My experience in the charts tell me that silver prices are likely to head to $75 to $125 an ounce in the next 1 to 2 years. That's about 150 to 230% gain for those who buy silver at under $30 an ounce. The reason why is that we are in a bull market for silver. This is going back years of a bull market, by the way. Not just the last year, because if you look at the last year, you're going to say, how is that a bull market? You can't look at one single year when the entire trend over the last 10 years has been up. So that's what he's talking about when he says bull market, where silver prices will likely continue to increase and unless something major happens. There are many fundamental things driving this bull market in silver, such as runaway government spending that is devaluing the dollar, instability in paper currencies around the world, central banks buying gold to protect their national currencies and to protect the value of their foreign exchange reserves, which are all going down, the tiny size of the silver market, which is under $3 billion a year worth of investment demand, the unknown and unpublicized supply and demand figures in the silver market, and unpublicized 10-year bull market in silver. Right? No one likes to talk about silver being $4 and $5 an ounce several years ago, last 10 years basically. Or 8 to 10 years ago, but a bull market for the last 10 years. You know, $4 or $5 silver, even at today's price, $28, $29, right? Let's just round that off to 30. That's a massive increase in the price of anything. To go from $4 to $5 to 30. Forget $50 last year. That's even more insane. Anyways, let me continue here. The last thing he mentions, the huge short positions in the paper silver market, which are up to $200 billion worth of paper silver sold to investors who are too lazy to take delivery and continue to trust the untrustworthy banks who don't have the silver that they sold to the clients. Again, they're selling pieces of paper, not physical silver. Every now and then someone demands delivery, and they have enough silver around to put those fires out. But they do not have the $200 billion worth of paper, backing of the $200 billion of paper, such as the real silver. And they know that the average person wants to play it for the leverage purposes. They don't want to mess with freaking big, bulky silver. They're not going to demand delivery. Except we're seeing more and more people demand delivery. So that's going to change. And when it does change, there's going to be a big uh-oh by the bankers and friends, such as, we don't have it. Uh-oh. And I wouldn't be surprised if they change the rules in mid-game and say, well, if you want to play the silver market, everybody, you can no longer demand delivery. We're changing the rules. We're discontinuing the old paper product, and we're coming up with a new paper product called the such and such, whatever, silver. They'll give it some name. And you cannot demand delivery if you want to play the market. So they would still try to control the price, but tell everyone else, trust us on the price, but you can't demand the real thing. I think if that takes place, that'll be the disconnect, or at least the starting of the disconnect of people who have physical silver when they sell it and get a price versus what the paper market says, if they do something like that. Knowing these people with their game-changing events that they just, mid-game, we'll change the rules in our favor so that there is no shortage of silver that comes out, in the face of everything going on, and there's a big uh-oh. I don't see how they would allow that. I think they would basically do what I said. And I've never really mentioned that before, but I've just been thinking about it lately, where I think they could change the game and say, no more demanding delivery for these paper products. If you want to play these games, you can only do it in paper, and you can only go for a paper profit. I think, though, because of other exchanges, such as the one in China, as well as hopefully the one that, and I say hopefully it's up soon, the one that Andrew Maguire talked about, him and some partners or whatever, investment people, trying to get a global exchange to suck the volume right out of the COMEX. If they had that one and the one in China working, you can demand delivery still. So who in the hell would care about the COMEX, what the COMEX said the paper price was for any given day? No one would even look to that anymore if you couldn't demand delivery. So that's kind of a catch-22 for them. I wouldn't put it past them, but just a thought anyway. So he says, now that silver has been put in a 10-year positive price trend, the silver market will be increasingly difficult for the financial world to ignore. As you and I both saw on Friday, this past Friday, and today is the 3rd of June 2012, so 2 days ago, Friday, silver was up 81 cents and gold was up $65 at the end of the day. $65 for gold, 80 cents for silver. All on the back of massive bad financial news. Bank stocks were tanking heavy duty. The Dow was down like 275 or 200 and something points. S&P, all of that was down. So we had the Dow, the main stock market, S&P, the Dow down pretty good. Bank stocks, Citigroup, Bank of America, JP Morgan, my favorite, etc., all down in the red, 3, 4, 5%, some of them. Pretty heavy duty. And meanwhile, gold and silver slap the nonsense out of them and go up right in the face of all this. So the other day I said that there appears to be major resistance at these price levels where gold and silver were currently at. That was prior to gold going to $65 higher and silver going 80 cents higher or 81 cents higher. There is resistance and people are starting to jump on board. Now keep in mind what the Webbot said the other day. The bankers and friends are going to be fighting tooth and nail, throwing everything they've got at the gold and silver markets to keep the prices somewhat manageable over the next 2 to 3 months. So, looking at what happened Friday, I wish the bankers a lot of luck because there's a lot of people getting involved in the gold and silver markets. Again, paper markets at this point. But sooner or later, much sooner than later, people will realize after a few more people have gotten burned by playing the paper game, I need to go get the physical thing. It's going to happen. Don't know when. Sometime in the near future, it has to. So he says silver will inevitably pull paper money into itself like a magnet, destroying the false and fraudulent value of paper money. You see, the problem with all frauds is that they tend to end rather suddenly. We are at the point where if 1% of paper money buys silver, it will destroy 94% of the value of the remaining money that was too foolish to buy silver at prices under $30. Or I think what he meant, too foolish not to buy silver at under $30. The math is as follows. $30 to $514 is a gain of 17 times greater, or 1,700%. When money loses that much purchasing power, the other way to say it is that the remaining money that now must buy silver at over $500 an ounce to protect itself from total destruction rather than $30, which is the price it could have bought it right now, which represents a loss of 94% of the value of the dollar, basically, when compared to silver and gold. There is no way to stop this process. It has repeated itself again and again throughout all of history. You see, the problem with socialism is that you eventually run out of other people's money to steal to prop up the welfare state that tries to give handouts to the insatiably greedy and lazy people. We have long passed that point, as the government now collects $2 trillion to fund a $3.5 trillion budget, spending and printing/borrowing at an additional $1.5 trillion per year. That's $1,500 billion. And I was just talking about the dangers to the dollar and the rise in silver to $514 an ounce. If only $180 billion tried to buy silver. Can you see the problem? The solution is simple. Buy silver before the next guy does. You see, the math shows that there is no possible way that the brokerage houses have bought and are holding people's silver for them. Let me read that again, because this is what I've been saying 100,000 times now. The math shows, math being something you can't argue against, that there is no possible way that the brokerage houses have bought and are holding people's silver for them that they claim to have bought. If they did, the silver price would be $500 an ounce already. And since it's not, obviously that's the case. Being defrauded is simply one penalty for being bad at math. That's life. Sorry, I didn't make up the rules. Don't shoot this messenger. Now, those are the prices that experience and the charts predict. My gut and the fundamentals of the math tells me a bit more. This is a manipulated market, and the math shows that the manipulation is failing, but it is still in place. I expect there will be an epic battle at around $50 an ounce for silver. That might last 6 months to 2 years because they won't want headlines that say, quote, silver moves to all-time high. And he's absolutely right. That's bad for business, the business of printing fraudulent paper money. Also, since it is a manipulated market, they try to create prices in short-term trends that are unexpected and discouraging. They will paint the tape with any price that puts a damper or discourages physical silver buying. If higher silver prices will scare off physical silver buyers, then higher it will go. If lower prices will do the trick, then lower it will go. Physical silver buyers are creating this market, but in a counterintuitive way. I'd thus expect to see large and sudden price jumps both up and down in order to create the illusion of instability in the silver market. Volatile silver prices are also a function of the tiny silver market, but they are also a function of the instability of the dollar. The sudden price changes of 10% in one day that we used to see only in silver stocks are now seen regularly in major stocks valued in the hundreds of billions of dollars on the major exchanges. Conversely, stable silver prices also discourage physical silver buyers because investors at this stage of the market are trend investors. If there is no clear trend up, people today tend to lose interest and forget about the fundamentals, or they foolishly think that the manipulations can continue forever. That is not so. The fundamentals are so out of balance, I'm surprised that prices remain this low. My problem is that I overestimate the intelligence of the general public. I do too. I feel that we have, and see the video I posted on my website the other day about Mark Dice trying to sell a 1 ounce gold coin for $25 right next to a coin shop by passerbys or passerbyers that said, we can even go in there. I'm just trying to get $25 out of this thing. I know it's got a $50 face value. It's a Canadian coin called the Maple Leaf, but it's gold, and it's 1 ounce of pure gold. Man, I might be able to sell this to you for $25, and you could walk into that coin store and maybe make a little profit. That's all right, I'm not interested. No thanks. Okay. And then a few times he would tell them, well, what if I told you this was worth $1,500? By the way, the deal's off, but this is worth $1,500. Oh, I'd feel like an idiot. Well, the price of this is $1,500. Didn't look too happy at that point. So let me get back on the track here. I feel that we have hit a bottom in silver prices for several reasons. First, it's time. Low interest in silver and moderate price changes can't last forever. Second, we recently ran out of 90% junk silver, both in our shop, he sells it, and at the wholesale supplier level. This indicates renewed investor interest. For sure, because silver, you say, well, it's used in electronics and, manufacturing processes for all kinds of stuff. Maybe that's where it went. No, they're not going to buy 90% for that. They're going to buy 100% 0.999 fine silver, not 90% silver, junk silver. So that's a clear indicator that people are buying the junk silver. Third, if they push silver any lower, they will create extraordinarily fantastic gains for the next group of value investors who jump into silver, which will also create extraordinary losses for the bankers who manipulate prices, and the bankers, such as JP Morgan, are hurting badly, as it is from the housing crisis, the euro crisis, and the hedge book problems. Again, look at last Friday, just 2 days ago's stock market, bank prices, everything. JP Morgan's like $32, silver's $28. It's been a while since they've been that close. And again, I for one can't wait to see if JP Morgan stock will go under the value of silver, and silver will stay above the price of JP Morgan's stock value for longer than a couple of weeks, which is the longest I've ever seen it go higher than JP Morgan stock price. If it does and stays there, and JP Morgan doesn't collapse, that is the telltale sign that JP Morgan is positively, massively out of its short position, or potentially all the way out of its short position. Out of it enough to where that won't hurt them. Whereas before, it very well would hurt and did hurt them. So, let's see what happens in that respect. If I were the one manipulating prices, I'd let silver jump up to about $49 nearly overnight, and then try to slowly grind prices downward for the next year or so, back to about $35 so, if I could do it. That would be the way to create the greatest kind of discouragement among silver investors, because it would create a short-term downward trend. Then let silver explode again super fast over some fake semi-positive silver news announcement, almost like a vertical lineup, to nearly $75, and then do the slow grind down again. These are the kind of counterintuitive moves I'd expect in a manipulated market designed to keep physical silver investors away from the major trend. But enough about short-term price predictions. Another point to keep in mind is that the latest bull market in the 1970s, or in the last bull market in the 1970s, gold prices stagnated below $200 for 4 years. So silver may be a great investment for fast major gains, but you also need to be patient. Sometimes it takes a while for others to see what is obvious to us. I cannot state that any better way than he just said it. Be patient, because sometimes it takes a while for others to see what is freaking blatantly obvious to you and I. Like those people in Mark Dice's video walking by, gold, I don't need gold. And his shirt even said, sound money. And then he's out there with his microphone and camera. Hey, can I talk to you for a second? I just want to unload this. I got to try to pay a couple bills. It's got a $50 face value. It's 1 pure ounce of gold. There's a coin dealer shop right there if you want to walk in there and have them verify that it's real. I wouldn't mind doing that. I'm just trying to get what it's worth. No? How about $25? I'll take $25 for it. I'm hurting. No, it's okay. There's going to be a day when Mark Dice goes out there. Hey, I'm trying to unload this ounce of gold. How much do you want for it? I'd just like to get 50. Let's go right now. And he probably won't be showing those videos, if anything, because his point that he's trying to make will then be, thrown out the window, because he's trying to make a point that people don't know what real money is, and a lot of people are all of a sudden saying, yeah, I'll buy it. That day will be coming sometime in the near future. I guarantee it. So he says, if you need silver, buy silver from us, meaning him, this guy, Jason Hommel. His website is jhmint.com. www.jhmint.com. Since this is his article and I basically just read it, I'm going to go ahead and post his link to his website out of respect in my video here in the description box. And because he makes completely valid points, I can't argue with a single thing he said, not even one. And again, there's that word, fundamentals. Fundamentals. Fundamentals would be like in a hurricane situation. Oh, the Gulf is heating up, or out there in the Atlantic area, it's heating up. We've got extraordinary high temperatures. Well, that's a fundamental that can drive storms that can turn into hurricanes. That means I don't care what you think about hurricanes, or why they exist, why they don't exist, why they're bigger than others, whatever you think, or there's not going to be a hurricane. When there's fundamentals out in the Gulf of Mexico and out in the Atlantic that say this is ripe to create some major storms that could turn into, hurricanes, you can't argue with the fundamentals. But maybe one time, hey, the water was warm, the air was right, but didn't create a storm that time. Well, just wait a little while. Oh, okay, there's one. Right? You can't argue with fundamentals. That's my bozo example for anyone that doesn't understand. what a fundamental issue is, or fundamentals driving something. Those are events or things that are always there, have been there, aren't appearing to go away, are still there, that are cause and effect. That's the cause, and it's creating an effect. And then there's idiots like Bozo Beast and whatnot who say the effect, nah, can't be from all these fundamentals over here. Not possible. So, anyways, that's all I got for you. Be interesting to see how the week goes anyways, and we shall see. Take care.